Rajiv, coming to you now, how has the trend been as far as mutual fund inflows are concerned?
As far as mutual fund flows are concerned, it's been a consistent positive inflow for the last 24 months. And what has happened is that the regime change at the center has brought back the investor confidence. Investors, as we say, always have money. Whether they want to part with the money, whether they have the confidence to, take it out of banks and put it in other more productive avenues, that is the question to be discussed. So, last 24 months, barring 1 month, in March, the flows have been positive. And this trend, seems to be, it has started off well in 2016, and there is no reason why it should not build up going forward.
Jiju, do you think these inflows may continue in May as well going ahead?
Yeah, so typically, the quarterly cycle is what you see in case of the short-term assets. That's primarily because of reporting quarters and corporates, taking money out of their investments in mutual funds, that you see that trend in case of liquid funds. But and that's something which you'll see every quarter. In fact, you've been seeing it for a very long period of time, and I believe that's something that you'll see going forward as well. The other notable point is the fact that the equity-oriented categories have been seeing inflows. And inflows for a fairly long period of time. In fact, last month was the only month when there was a net outflow. Otherwise, we have seen 23 continuous months of inflows. So, to answer your question, given the positive sentiment that's there on the equities as well as on the income funds, as of now on the sitting on the 10th. We can possibly see some more flows really coming into income funds as well as, for that matter, the debt funds.
Rajiv, other asset classes have not been doing that well. Do you think that could be one of the reasons for stronger flows for mutual funds?
Definitely, there is always this, TINA factor which kicks in. There is no alternative really. Real estate is down and is expected to be down for a continuous period. So if last decade belonged to, most of the wealthy investors and aspiring investors, if they made money in real estate, in the next decade it is believed that it is the financial markets where the money will be made. Now in financial markets, bank deposit rates have been slipping down. The postal saving, rates are coming down. What are the avenues where a fixed return investor should put in money? Those are shrinking, and with GSEC yields also moderating and expected to moderate further. So people are realizing that they need to look at debt funds as a vehicle, as an alternative vehicle, and there also then there are investors who have long-term goals to achieve, like their own retirement or other long-term financial goals which are 5, 10, 15 years away, and that's where the beauty of equity kicks in. So I would say two factors: a broader, broadly increasingly positive economic scenario. That is one reason for equity flows picking up and overall mutual fund inflows picking up. And second is that there is no other alternative really with other investment avenues, shrinking.
Rajiv, when you see different types of funds, which ones do you think will have strong inflows going ahead?
We are a retail wealth management company, so for us, the jewel in the crown is the equity fund flows, and they have been, increasing steadily. And for the industry as well as for us, SIP book, people are increasingly realizing the importance of a regular, disciplined way of investing, and they don't want to really, try and beat the market, because nobody has ever beaten the market. In short term at least. So therefore, people are realizing that strategy of investing in market is more important than trying to time the market. So that is why the SIP book, today there is, almost 3,000 crores of monthly flow and 1 crore running SIPs in India. So that is really contributing to the asset build-up overall. And in addition to that, we are seeing people coming in accrual-based debt funds as well as medium-term duration funds. And then obviously people are also parking their short-term savings in liquid funds in preference to savings account. They know that they can clearly get maybe 2% more, and why should they be losing on their short-term savings?
Jiju, within MFs, which scheme do you think will see the most inflows going ahead into the say for the next 6 months?
So I think equity, while the equity markets saw a fair bit of turbulence in the recent 1 year, we have still seen fairly positive flows. So in terms of flows, if we are really going to look at it, I think equity is clearly the one that should do well going forward. Debt, it is primarily to a very large extent linked to interest rate cuts, interest rate views, and so on. But equity, is really the long-term asset, and I think equity should do well going forward.
Rajiv, what kind of AUM growth do you foresee for your company and the industry?
Yeah, that's a good question. We have been tracking mutuals. We are a part of the mutual fund industry, the private sector, since the beginning. And, so we have been, the last 5-year trend has been that approximately mutual fund industry tends to grow around, the rate of growth expected is around 15%. And if you see the last 2-year trends, in 14-15, the growth was around 24%, 24-25%. And in 15-16, it has been 20%. So we are benchmarking our growth at the same levels. Now we are also working on strategies on how we can actually beat the industry growth. So those are some plans which we are still working on. And we have an online platform which we've just launched, and that should help us accelerate our resource mobilization in mutual funds.
Jiju, since the flows into mutual funds domestically have been strong, do you think that domestic funds now have an upper hand as opposed to foreign inflows as far as market direction is concerned?
I think, if you were to look at, the pattern of FII flows with mutual fund investments, you will to a large extent see that even when, FIIs have been, when you see FII movements being on the negative side, you have seen mutual funds being net buyers. So if you ask me, I would actually, say that even if there is some angst, regarding that, mutual funds would be net gainers really, because they can tend to buy at lower levels. So, from the perspective of maturity of the markets, possibly we are moving in that direction. But even otherwise, mutual funds tend to gain, when there is volatility. I mean, and therefore a mutual fund investor as well.
All right. On that note, we leave it at that. Thank you so much, Mr. Rajiv Bajaj, as well as Mr. Vidyadharan, for joining in.